it staggers me that people get emotional about somebody else's portfolio.
Talk to me about the other coins as well, because if you got in November, very painful. If you saw gains like you experienced, we get a lot of questions. Should I continue? Should I hold? Should I take profits? Do I buy more? Do I buy this dip? How are you thinking about that space?
Everything comes down to time horizon. Firstly, don't put too much money in that you can't afford to ride the volatility. I've told everybody this for 2 years now. Expect 50% drawdowns as normal course of business and not calling it a bear market, just calling it a correction. So that's what we need to deal with, and everybody needs to make their own decision. It's also time horizon. If you think it goes up 20, 30x over the next 5, 6, 10, whatever your number is, well then a 50% drawdown is just small noise on the chart. If you're trading for a 3-month time horizon and it falls 50% on you, well, you've got it dead wrong because your time horizon is different. So I am looking to add more to my positions into this kind of market because I don't think anything's changed. Nothing's changed in the network adoption. Network slowed down a bit for the reasons we talked about before. So over time, we see the institutions coming. I'm talking to them every day. I launched a crypto fund of funds. We've already put the first $100 million to work. That goes straight into the markets via the hedge funds. That ongoing allocation of assets is happening. So it doesn't stop. So it trades sideways for a year. That's great. Tends to mean periods of suppressed volatility lead to hyper volatility. Periods of hyper volatility tend to lead to periods of suppressed volatility. And we basically had a sideways market where volatility has been falling since May. In terms of the allocation of tokens, the answer is I don't know. Yeah. It's complicated. We had a big move in the layer ones, AVAX, Terra, and Solana. Usually chasing the previous theme is a way to lose money for the reasons you said before, is you're not taking advantage of weakness. What you're trying to do is follow the momentum in a market where people are just rotating. That's usually bad. You can add to momentum trades when the whole market's in momentum, not when it's rotating. So where could the rotation go? That's the question you should be asking. Well, some of these DeFi ones had a big run in 2020, haven't done anything and fallen 70%. Maybe it's DeFi. Maybe it's the interoperability, the ones that allow you to move things from one chain to another. They haven't really had a big run. Maybe it's those. Metaverse have had a run, NFTs have had a run, layer ones have had a run, Ethereum's had a run, Bitcoin's had a run. So you need to be thinking, okay, what hasn't had the run yet? And again, I wouldn't try and look for one particular single token because your probability of success, unless you really know it, is super low. Build a basket of stuff, equally weighted, don't take too much risk, wait and see. Crypto have been trading sideways because wage growth has not kept up with inflation, so marginal dollars to invest by retail has been reduced. And I think that it gets partly caught up in the growth story, but there's no correlation really between bonds and crypto, the dollar and crypto. They're all passing correlations that come in and out. Suddenly the S&P is correlated for a bit and then it's not. So I don't worry about that. I just look at the network effects over time. But if the Fed increase the size of the balance sheet, then it's all correlated because you're lowering the value of the denominator. So that's why when the Fed increase the balance sheet, what you find is that everything goes up. Now, does it happen when the Fed decrease the balance sheet? Are they going to shrink the balance sheet? And does that crash the markets? If they do it, markets will stop going up as much because of the fact that you're increasing the value of the denominator. So yes, we saw it last time around. There was a period of time as the Fed were reducing the size of the balance sheet. No, they kept the balance sheet stable. Stocks were sideways for a while. But then even with a stable balance sheet, stocks took off again because the growth story is still underlying. What the market won't like is raising rates. It took 8 times before the market cracked last time. So it never happens on the first couple of goes. The market has a wobble, but then it shakes it off. So it took 8 times last time and it took the balance sheet taper. And then the market started rolling over. So
what's your opinion of ARK and Cathie Wood?
So I'm It staggers me that people get emotional about somebody else's portfolio. Change, it's all about, non-traditional valuation metrics using things like Metcalfe's law. They don't like it. I really respect Kathy's view. And yes, she's dealing with this massive rotation out of the names that she owns. It's normal. I have a log chart, I have an ARC that I look at all the time, a monthly log chart. It's about 2 standard deviations oversold in the trend channel. Most likely we're at the lower end of the range. $70 is 2 standard deviations. We hit 78 today. Does it break it? False break, go higher? Probably. So I am getting very interested in accumulating. I've been talking about this trade for a long time, been waiting for this to set up, letting the inflation narrative get bigger and bigger and bigger, let people throw the baby out with the bathwater, which is the network growth stocks that you absolutely want to own for the next 10 years. We're getting an incredible entry point, I think. Now, I understand people think there's technical difficulties because she ends up selling liquid stocks to fund the illiquid stocks. I get that. Let's see how it plays out. I get there's a risk. That's okay. Markets have risks. And we're all adults and we decide what risk we'll take and what risk we won't take. I'll probably take that risk.
Entry point is really important, isn't it? Because, we've seen a lot of concern and a lot of angst over the decline we saw in crypto from the November highs. So if you bought at that time, it's been incredibly painful and stressful for people. But in your note, in your GMI note to your investors, your think piece in January, you kind of reminded everyone what the gains were in Bitcoin and ETH last year. I think it's worth reiterating that, right? It depends when you get in.
That's right. I mean, last year I had one of the best years I've ever had. And Ethereum, which was my biggest bet, was up 450%. And Bitcoin was a smaller bet, and that was up 60%. And a whole bunch of stuff was up hundreds of percent. And that's not to boast about me. It was about sticking with the plan that I had, and I got the right timing to get in at the right time. So if you remember at the time, I'm a macro guy. I wait for the buses to turn up. I don't try to find every trade. I'm not interested in that. I'm not a short-term guy. So I wait and wait and wait. And I waited for that crypto opportunity. I'd been saying for maybe 2 years, 3 years that crypto and macro are about to meet, and it's going to meet at the next recession. The Fed are going to have to print massively, and this is the time to buy. And I went all in. And I've been talking about the exponential age for an extended period of time now, saying, listen, this is the big trade. The big equity trade here is the exponential age, which are all of these network adoption models of modern technology. So here we are setting up exactly the right trade, which is stuff like ARC or Scottish mortgage, all of these things, they're all coming for the entry point. You get the entry point right at the maximum point of fear when everybody says, this is terrible. That's the point you can drive extraordinary returns if you're a long-term holder. I'm not a trader, so I don't really care about the next 3 months. If I buy ARC, I'm expecting to hold it for 5 to 10 years. And if I get it right, it'll go up 10x. That's what I'm thinking.